We are live and in charge. Sweet. All right, y'all.
Good,
Today,
Ed.
today
Good,
is today is another day for drinking. You guys look like you're in your offices, right?
Yes, I am in my office.
So don't drink too much, Mark. You're not allowed. Ed, are you at home?
I am at home, yeah.
Good job. I am sitting.
I have my all of me loves all of you, Fred.
Oh, I love you too, Ed. Fred and Ed hanging out together. Anyway, White Claws are open.
Cheers.
And cheers, y'all. So,
Cheers.
my name is Fred Rea, founder of Rain City Capital. We are a local hard money lender to the Pacific Northwest. And then today we have joining with us a very illustrious crew, guys that have way more experience than I do. I got Mark Spurbeck. You know, he's the 25-year title professional. So most of the time he knows what he's talking about. The rest of the time he picks it up. And they got Ed Laine, who is, you're a super veteran to the real estate industry, and been around, seen a lot, done tons and tons of transactions. So anyway, we're here. We're hanging out. Hopefully you have a drink in hand. A couple of just housekeeping things really quick. What we want to do is, I want to answer some questions first. Ed, Mark, and I, we're going to talk for a few minutes, probably about 40-ish minutes. And then I'm going to ask them some questions just on what's going on in the market and the real estate in general. And you guys can chat or add things to the Q&A down below. And the last 15-ish minutes, maybe if we go longer, we can bring you up and bring you as part of the panelists, and you get to ask kind of face to face, so to speak. The only thing to ask is that you guys, put your questions in the Q&A if you have them, and if you don't feel like getting up and talking, we can answer those just individually. If you don't have a drink in hand, even water, we'll still probably, we'll ask you, hey, where's your drink? For last week, he had a vape pen, which that still counted too. So, and be nice. Don't be a dickhead. Don't be like me some of the time. So anyway, guys, what's been your drink of choice during this crazy quarantine time?
Mine is typically red wine. I'm a big, chewy Cabernet guy.
Ooh. So
today,
what flavors are we talking?
Supporting the Blue Moon.
Blue Moon, nice. What's what's your go-to top two? Because I'm a big cab guy too.
Have you ever had Wines of Substance?
No, never heard of
it. You probably have seen it. It's the black bottle, black label with just CS on it. It's so I love too costly wines. So I'm always in pursuit of what's a decent price but good wine for daily drinking, and that's
called those cellar protectors.
Right. That's under $20 a bottle, really good Cabernet. And you can find it at Costco.
My two favorite kind of daily drinkers is the Chief from Mark Ryan and Quilceda Creek CVR. CVR is over 20, but it's pretty good.
Yeah. I wouldn't reach for Quilceda Creek with the $20 mindset.
Yeah. That's fair. Mark,
what about you?
What are you drinking?
I drink, I don't know, what is it, Monday through Friday after work. I love getting home, breaking out the Tito's.
Ooh.
Vodka, martini with a couple olives. Thursday night's date night, so I love that great big, red, chewy, full-body Cabernet once a week for date night on Thursday, which is awesome.
Tonight?
Man. Yeah, Thursday night's date night, man. Well, you're getting it started early. I like it. But,
exactly. So that's super important to me.
She's going to be bummed that you started drinking at 2:30.
Why didn't I start drinking at 2:30? You're going to come home with a smile on your face.
Well, hey, it's my job. Sometimes, we're quarantined, but yet, we don't get to go out to restaurants anymore. We don't get to go out to golf tournaments anymore. So we have to figure out a way to connect with our customers in a different way. So here we are.
Amen. So what's keeping you guys sane in quarantine? What's your, aside from alcohol, which I think is a lot of people's vice, Like what are the things that you're doing, either like habits or things in general that's keeping you guys kind of targeted?
Good question. So I'm a big Miracle Morning guy. Are you familiar with that
Oh
book?
yeah. Or like the 5-minute morning type thing, right?
Yeah. So I have a morning routine, and that kind of keeps me grounded, for the most part. Like whenever I skip it or don't do it, I kind of feel rudderless. So that's made it feel more like, even though I'm not leaving the house as much, I'm still very productive and grinding.
Good.
That's good. Yeah, it's same here. I have a routine that I'm rigorous on. I read every day. I journal. I am fortunate that you get to come to the office every day. I get here early in the morning and pound out my day. But I think probably the biggest thing is keeping me sane through all this. My significant other and I, Ulrika, we do yoga together every night. I've missed one night since quarantine. So we have a 45-minute little yoga routine we do on YouTube, throw it up on the big screen and throw our mats on the floor and pound it out. So it's been pretty good, keeping me healthy and loving it. I'm journaling every day, so that's solid for me.
We had somebody last week, Ian Morrell. He's been journaling every day too. I've heard a lot of that recently. I think, I wish I started doing it a month and a half ago, because mental space today versus the mental space that I was in 6 weeks ago, it's two very different places. I can tell you that much. But that's amazing, man. I doing yoga every day. I'm like 10 pounds into my COVID-19, and I'm pretty sure
10 pounds down and happy with it.
Dude,
he's rubbing it in, Fred.
I am
just a little bit, buddy. Just a little bit.
I'm kind of jealous, but I'm also like, I've been relaxing way more. I don't know, whatever. Yeah. What are you gonna do? Okay, so I think we got a few more folks on. And they're kind of getting rid of the pleasantries here. Again, my name is Fred Rea, founder of Rain City Capital. I have today with us two awesome individuals with tons of experience in the title escrow side of things, and then the real estate side. For the most part, locally too. Rain City is a local private money lender, hard money lender, if you want to call it that. Been around since 2009, and we are still crushing it today, albeit very significantly less loan volume. But we're still in business, so that's what counts. And we got good old Mark Spurbeck. So I've known Mark Spurbeck. I don't know how long I've known you. He's been my title guy for a long, long time. But he's also been in the title business for 25 plus years, right? Closed, tens of thousands of transactions. He was one of the guys that really helped a Blackstone get into the real estate market here, and help them buy stuff all over the place. He's been a pioneer in his industry for, for forever, since the 90s, when he is really kind of like the guy that's always been on front of the digital era. And really kind of a pioneer as far as title and escrow in that industry, which is really applicable today. And that's one of the reasons why I wanted to have him on. So thanks for
keep talking, Fred. I'm liking it. Keep talking. My head's getting bigger and bigger.
I'm just trying to get I'm just trying to, work in some wine there somewhere. So should I keep going? Then we got Ed Laine. Ed Laine, you've been in the business since the 80s, right?
1987. Yeah.
87. So you came into the business in a really kind of unique time. That was right. Black Monday, like.
Yeah.
Jeez.
When I was 3, though, Fred. So
yeah, no, absolutely. I'm telling you. Well, I was born in 1980, so I wasn't quite 3, but either way. You have over $1 billion in real estate sales and in mortgage sales, which I don't know if there's any human on the planet that's actually done that aside from you. So that's something that's pretty darn amazing. And you've got to see a lot of ups and downs all across the way. And, where I met you was you were doing just a crap ton of REOs, back in whatever it was, 2012, 2011. And I remember like, man, Ed Laine actually called me back. Must be doing something right. So anyway,
you're kind of a big deal. So come on.
I don't know about that. I'm just trying to be like you guys. But anyway, thank you for being on. You guys are awesome. I want to this is about having fun and drinking a little bit, but also, providing value to the folks that are on here and that took the time out of the day to listen. So, I always, one of my favorite questions, and, I'm going to ask this to everybody because it's always kind of fun to get the answer. And it's a good way to prime the pump for like what we did. But Mark, let's start with you. What was your first job?
Well, you guys got to understand, I grew up in a very small town called Moses Lake, Washington, and I grew up in a farming community. So my first job was, I started, I think, 4.5, 5 years old, working on the farm. But my first real job, my uncle owned a vacuum cleaner and sewing machine store. So every day after high school, I'd go and work with him at the store, and we had a lot of fun. I learned how to clean vacuum cleaners, fix sewing machines. I learned how to do demos, but he introduced me to Tom Hopkins. How many of you guys know how to master the art of selling anything? That was at 15 years old, I went to a boot camp and I was introduced to sales and I fell in love with it back when I was 15 years old. So that was really my first real job, selling vacuum cleaners and sewing machines. And I look back and I learned a lot. We practiced a lot. We went to the fair every summer. So I'd go to 3 fairs during the summertime and we'd be there for 7 days straight. And we had hundreds of people coming by that we could work on sales techniques. And I took that as the foundation and here we are today. And I absolutely thank him tremendously for giving me that opportunity.
Did they teach you the smile and nod?
Yes, sir. Uh-huh.
You'd really like to buy the sewing machine, wouldn't you? Yeah.
Could you imagine? Think about it. A 15-year-old sitting down with a grandma learning how to stitch a stitch. And I had a lot of fun. It was good. It was a good opportunity for me.
What about you, Ed?
My story is not nearly as prophetic, I guess. Other than, paper routes, that kind of stuff, my first real job was...
Well, paper routes count, I should say. Like, I think paper routes count. And maybe that like your real like W-2 job, but...
Yeah. Well, then it's paper routes. My first real job, like in the workforce, was... have you ever heard of Marine World Africa USA?
No.
It's a think SeaWorld, but with land animals as well. And it was a work in Redwood City, California, where I grew up. And I worked in the like food service part, picking up garbage in picnic areas at a amusement park.
So basically you're the guy that with like the little bucket and the sweeper is walking around and
had my
get up.
My brown polyester pants, and it was awesome.
How long did you work there?
It was funny because I worked there one summer, and then I figured out really quickly that lifeguards made a lot more money. So I went and got certified as a lifeguard, and I came back to it, and I worked. They had a water slide park, and I was a lifeguard at the water slide park for a couple of years.
Dude, that's like, ever seen Sandlot before?
Yeah.
Wendy Peppercorn. We let our kids watch Sandlot recently, and there's a lot of swear words, but man, that's a great movie.
It is a great movie.
I'm just gonna call you Sandlot from now on.
Hey, I lifeguarded in the U.S. for 6 years, and I lifeguarded in Australia for 6 months. And in the U.S., I had one like full-blown resuscitation rescue. And in Australia, in just 6 months, I had 4 of them. And I was like, you guys live on a really big island. You should learn how to swim because that's, kind of important when you live on an island.
Fair enough. Fair enough. Oh, man. All right. So, again, thank you guys for being here. This is awesome. I don't see either of you guys drinking, so I'm going to force a drink. Cheers.
Peer pressure already. I like
peer
it.
pressure already. Yeah. I mean, we're only 10 minutes into it. I'm good at peer pressure. So, one of the things I don't know if you guys know that I'm like, I get kind of nerded out. I have someone in the office that I'm always looking at census and data and like places where I want to make loans and don't. But so I tend to get a little bit technical sometimes. But Mark, starting with you, what are some of the things that you've seen change in the title and escrow world? Like has what changes with signings, and I guess just in general, like what are you kind of dealing with on your end to try to help kind of keep transactions running smoothly?
So to start off with, every signing has a mask.
Yeah.
Gloves, we have pins, we have partitions between the notary and the clients coming in, if they even come into our office. We created a new phase called curbside signing, where we'll actually meet customers in the garage. We meet them in their front porch. We even met people where we park the cars and hand documents through windows and show IDs. And one person's on their cell phone FaceTiming while the other person's in the car, and we're walking them through documents back and forth. And it's been very interesting on how our communities still come together. We still know we have to close homes, and we're just getting it done. Dealing with some of the counties that have, or smaller counties that actually completely shut down, we've had to put things in place like gap insurance. So we can still close the transaction, and then when the county reopens, then we'll record. So there's been a lot of different things. It's also forced us on the escrow side to where, with the counties being closed to the public, we are now closing 100% of our transaction in a digital manner. So it's created, we're more efficient, we're saving money in that aspect, but dealing with just the human touch and being around people, things have really changed.
Yeah, for sure. Ed, what about for you, just from title and escrow? Because you're obviously involved with a lot of closings. I guess what are the people feeling and seeing through just this stuff, having to go through a totally different process?
It's the way I describe it to people is that buyers and sellers and even agents, they all kind of fit on this continuum, with what's going on. Their fear continuum ranges from paralyzed with fear, won't even get out of bed, for fear of catching a virus or spreading it, all the way up to the other end, which is they think it's all bullshit and it's a conspiracy and they're ignoring whatever.
Yep.
Everyone else is somewhere in between on the bell curve, right? And so what we've seen is there's a percentage of buyers who are saying, you know what, I'm gonna sit on the sideline because of the uncertainty, and we can't really fault them for that. All we can do is warn them, right? If you're welcome to do that, you're not making a mistake by doing that necessarily, because there's a lot of other people also doing that. But here's one thing I know: when you see in the news that things are improving, you're already too late. Rates will have already gone up. Prices will have resumed, appreciation rates that we have been enjoying up here for a while. And same for sellers. So, we track all the activity stats literally every day. And what we saw with the lockdown was new listings and new escrows fell by 30%, and then stayed there, like plateaued or stabilized at that 30% number, and then rose by 41% after about 10 days. So we're actually seeing more listings coming on in the third week of lockdown than we saw the week before we went into lockdown. And so, in the end, consumers should not be afraid to take action in this market. We have to do, what Mark's showing you with masks and gloves. And I was showing a property today, and it was kind of funny because I walked in, put on my mask and gloves, and I don't do it because I'm fearful. I do it because you never know who's with you that might be fearful. So you do it to make them feel better. And then sure enough, after it was over, I was talking to my client, and she was like, "This is moronic." And she's a doctor. So she's plugged into all this stuff. So I ripped off my mask, and I'm like, I don't have to make you feel better. So.
That's crazy. It really is kind of like, it's a big spectrum. And one of the things that you touched on, Mark, that I think is also important is like, what is gap insurance? Because I don't think, the first time I heard it, I was like, what are you talking about? And I'm like, oh, shit. And that's actually pretty important in places where the county recorder's office is closed or they don't accept the e-recording. So can you just quickly explain what that was?
So without an attorney behind me, this is Mark Spurbeck's words. Gap insurance is when we insure the transaction, we're insuring that transaction from the date that transaction closes till the transaction records. So there's a gap in between where someone can slip and record a document in there. in between the time of the closing until the time of you actually have a recording. Because we, on every transaction today, when we close a transaction, we do what's called a date down. So we check county records to see if there's been anything filed against that property prior to funding the transaction and closing. So when you have gap insurance, it covers that gap. And again, that's Mark Spurbeck's definition.
So like if someone was gonna, like, from the previous owner wanted to put a mechanics lien on that property, or there is a judgment or something like that, and it happened in between that time period, you'd be insuring against that deed, or that lien or whatever it came up. And
yeah, we would have to deal with that
during
that gap.
Makes sense. Okay, cool. I just want to touch on that because it was, that's kind of a foreign concept for a lot of folks, but very applicable to today. And I think Spokane County was down for a while.
Yeah, Grace Harbor was also down. We actually had a transaction with one of my lenders where we closed, and they called me up and said, "Hey, how are we going to record?" It's like, well, we have gap insurance and walk through the whole process, and we're good to go.
Here's how it works. Yeah, it's definitely like it's the weird nuances of some of the stuff, and we dealt with a foreclosure auction a lot, so we're kind of familiar with what the gaps between it. But actually insuring that is a super important part. And Fidelity owns a pretty big part between not only itself and its affiliates, just a giant portion of the real estate transactions. What are you guys seeing right now? I mean, Eddie kind of touched on it a little bit. Are you seeing refinance volume go up and purchases go down? Are purchases starting to kind of climb back up again? Where are we at today in the numbers, and like over the last 6-7 weeks?
When you look at go ahead, Ed.
Well, I was just going to say, at the beginning of that 6-week window, we had 2 weeks of literally the lowest rates in history. And so the refi pipe exploded, and then the pandemic lockdown sets in, right? So you saw purchase applications plummet, but you saw this huge, it was like the pig going through the python, right? Where you have this huge volume that most servicers are working through, and that's helping them keep the lights on. But financially, they got a dilemma with margin calls and having to advance the interest, even though their borrowers might be in forbearance. They still have to make those payments. So they got some real potential issues. But the good news is, in the last 2.5 weeks, the purchase applications have started to rise again. That continuum we were just talking about a second ago, buyers are starting to re-enter the market.
Yep.
And we're also seeing that from the title escrow side of things. Refinances are just huge part of our business today. And we also saw the slowdown, and now they're starting to come, the purchases are coming in, and we open title on new listings coming on the market. And when the first week or two of the pandemic, it was really slow for new listings coming on. We're starting to see more and more active listings come on, which is great.
Got it. And what do you guys think about, have you seen deals fall apart because of financing so far? I think, a lot of us know, and if they don't know already, that there's just a lot of folks that, or like the Fannie Mae, Freddie Macs of the world, and everybody else, non-QM, and non-QM is gone, right? But, Fannie Mae, Freddie Mac has all these overlays, and they're really kind of tightening things down. Do you think that there's going to be an impact in general on, the closing just based on credit tightening?
I believe so. Yeah. As you mentioned, right, non-QM is gone. Down payment assistance gone. Jumbo products are all gone except for 2 investors. I mean, there is just this constriction happening, right, and the availability of funds. And a lot of lenders, they're not sure where the bond market's going to go, so they're almost fearful to do much longer than a 15-day lock, let alone a 30 or 45. So all of those things, I think, contribute. And the other thing, your initial question was, have we seen any deals blow up? Yeah, the lenders now are 100% of the time making a QC phone call to check employment on the day of funding. And they got kind of lax on that. They used to do it pretty regularly, but then they got, 1 out of 10 or whatever their criteria was. Now it's every single deal. And we had a client last week, or no, the week before. She got laid off on April 7th. Our close date was April 8th. And she was devastated. And I told the agent, it wasn't my client, I just said, remind her how it is that she didn't get laid off on April 9th because she would have closed and then really been screwed, right?
Yeah, with the brand new mortgage payment and everything else. Man, that's crazy. So if you were to give advice to, the real estate investors on the call, to kind of help make sure that you're you can't help job loss the day before, right? But, what advice could you give to, the investors, the guys that are buying houses, or the guys that are selling houses right now, to kind of like stay as safe as you can, but, make sure that to keep transactions together?
I think their criteria should drive everything, right? If your interest in a deal is because the numbers say X, and whether you're a buy and hold guy or a fix and flip guy, whatever, the numbers don't change, right? The market can evolve, but in the end, if it was a good deal in a good market, it's still a good deal now. You might have more limitations because of your lending, availability of lending, but the one thing I caution most investors is I hear a lot of people saying, well, if I just wait long enough, I'm going to see prices go down. And it's not going to happen. I mean, this is not 2008. It sucks. We got 30 million on unemployment. This is going to be the next great recession. But we started with a much stronger economy, and so we'll recover a lot faster. And I also think the forbearance phenomenon, those banks are going to get like slaughtered if they give someone forbearance and then foreclose on them, right? So they're going to do everything they can to provide workouts and that sort of thing. So I just don't see a glut of distressed properties coming. It'll go up
on my side. On my side, I think it's super important for an investor to ensure that they have their permits in place. If they've been red tagged on a property, it's taken care of. These are some of the issues when we look at the peak of the fix and flip. Now some of these homes were fixed and flipped and sold. Now they're starting to be refinanced and sold. And the title companies now are starting to deal with houses that didn't have a permit. Someone that was red tagged and sold the property anyways. So these are some of the issues I think for investors today. They need to really make sure they have those pieces in place and really just dial in to make sure that they have their properties, they have the permits, they've done everything right. So, and I talked with our title officers and about King and Pierce and Snow, and they're still open for inspections and all that. So their online systems are still working. People are getting out there inspecting properties. So I think it's just super important to just keep your eye on the ball.
Got it. So, I mean, is that something that Fidelity is going to like come back and say, hey, it looks like you did a bunch of work. This beautiful property. You're selling it for $200,000 more than what you bought it for 6 months ago. Like, did you get a permit?
If we are asking for documentation, that is something we always have done. If you've done a full, like you said, a $200,000, $300,000 rehab, obviously there's a lot of work that was done. We're actually doing drive-by inspections on some properties, some we're not. So there's just conversation that's, there's more risk there. So we're just really taking a look at it.
Got it. Huh. I never knew that they would drive by. I always like on the foundation endorsements and stuff like that. Someone would always drive by, but not just normally.
Yeah.
Good to know. So, here's like the $1 million question, right? This is the question that I get asked all the time. I say, I don't freaking know. But you guys don't get to say that.
Well, wait a minute.
What happens over the next 6 to 12 months in this market? If you're rubbing your crystal ball and you're saying, man, this is what's going to happen. What are you guys thinking? Like, where's this market going to go? Like, how are the things that we're doing today going to shape the future? And how will it be applicable? I mean, Mark, you did a lot of work with the virtual notaries, and you can touch on that if you want, but it's like just stuff like that. What's the world going to look like? Not necessarily predicting the future, like we're going to see a 5% drop, but like, what are we going to see? What are you guys thinking? And what are the things that we're learning and doing today that are really going to be like cornerstones to tomorrow, 6 months and 12 months, and as far as our real estate market is concerned?
I think that's multiple questions in one, Fred.
It is.
So let's start with.
I want to give you a wider bandwidth of what you could answer with, not just like, hey, we're going to see
where
a
do I
10%.
start on that one? That was wide open.
We're going to call you out too if you answer 4 of them, but not all 5.
Yeah. Mm-hmm.
I think because of the pandemic, we've been required to look at our current business practices. Working from home, what does that look like? You know, we have individuals that our first week working from home was an absolute disaster because we had to get all the computers set up and get them VPNs and all the different things that we needed to get them up to speed. And some people, you know, have offices, and some work off their kitchen sink, off their kitchen bar, and others work off their kitchen table. And then you start to, and once you got set up, we noticed our productivity went through the roof by week 2. And, you know, Netflix gets old after a while, and you start working more than 8 hours a day. Next thing you're working because you're bored. And all of a sudden our productivity went through the roof. That's one thing I think we're going to get out of this. Can we sustain that in working from home? We miss that collaboration between title officers and escrow officers when they're in the same office communicating back and forth, just, you know, that coffee talk. I think that because of the pandemic and the fear that's out there in the state of Washington, we were scheduled to go to a remote online notarization in October, but we had a proclamation that came out that said, yes, we could go ahead and move forward on that. And what that means is instead of sitting face to face with a notary, you are logging online in a session that's recorded, video, audio, and screen capture. We use KPAs. And then we also use where you hold up your driver's license and hold it off to the side of your face, and you have biometrics to make sure you are who you say you are. I think because of those securities that are being put into place, we're going to find that we as an industry change the way we do our business, which is going to be more interacting with the consumer over the internet, which is going to speed up the process. It's going to, in my opinion, it's going to make it even more secure that we won't have the fraud that we've experienced in the past with potential transactions. So I see a lot of benefits of us moving through this process.
Got it. Makes me think about you know, the Instacart guy that shows up in my house, or gal for that matter. And if there's alcohol in the purchase, which there is in basically every one, I'm supposed to get a giggle out of that one, but whatever. There's you know, you have to show them the back of your ID, and they have their phone out, and like, okay, that's you, and like you can take it to that address, and you take that much further. So that's kind of interesting. That'd be kind of cool. It'd be nice not to have to go somewhere to sign stuff. That's probably the most cumbersome part.
And I think the big thing with that is as we go through, there's some lenders that allow it, and there's other lenders that don't. So if you are a mortgage banker and you have wholesale lines, are you going to be able to produce a 100% digital transaction? Mm-hmm. So those are some of the challenges that we're running into before it becomes mainstream. Because you have what you call a hybrid signing or a full digital signing. So sign some papers and then digitally sign others. So we're getting there as an industry, and I'm excited about where we're going.
Awesome. Well, thanks for all the hard work doing that stuff, because it helps all of us, especially in times like right now. What about you, Ed? What do you think? What do you think is going to happen? Market's going down by 30%, and we're all going to die.
No, I was thinking more about.
Uh-oh. He froze up.
right when he went for it too.
Yeah, exactly.
Dude, see, he got out of answering the question right now.
That we would keep. Spurbeck talks about.
Oh my gosh, Ed, you're getting smoked right now. How's your internet?
You've been freezing up, buddy. We missed your whole statement.
I think my son must be surfing porn because my bandwidth.
Oh man, that's fantastic. I was like, he just didn't want to answer the question.
What I was going to say is Spurbeck talks about biometrics and reducing fraud, and my first thought was the best part of the pandemic is now restaurants can sell booze to go. I thought that was going to be a great thing.
Yeah, it's like Texas right now.
Right. What see in the future? I think, you know, we're in a recession. We're going to have increased foreclosures. I don't think we're going to have, at one point in 2010, 2 out of every 3 listings on the MLS was everyone in my family knows I'm on this webinar, except my.
Hey, that's something new. I've never seen that before, Ed.
Yeah. That is one of the good things, though, that's coming out of this is people are less uptight about interruptions and.
Oh, absolutely.
Dude, I have a family of 6 that lives at my house, so there's 6 kids running around, all between 3 and 11. Like,
oh shit,
it's a shit show, dude. I mean, it's so much fun, but it's a mess, man.
It's a good mess, though, right? Time with family, that's not bad. My kids are in their 20s, so I promise you will miss the age they're at now.
Yeah.
I think we're going to see a big rush to the market in a good way. There's a lot of sellers who are waiting on the sidelines, a lot of buyers waiting on the sidelines. When at whatever point that there's at least a course of action, whether it's a vaccine or, right now the front runner is medication that at least helps you in fighting it. Those are going to cause the markets to start to recover. I mean, shoot, we had the markets went up over 500 points yesterday just on that news. So it's going to be good, right? And then you will see about 12 to 18 months from now an increase in foreclosures. And I'm still very much active in the REO market. So I'm getting an increase in BPO requests and drive-by evaluations because banks are trying to see if Joe and Susie homeowner are going to make it. And if not, what's their home worth? So I think we're just going to see more, right?
Yeah, just a little bit more activity, but how and when.
Right.
Got it.
And I run a trustee sales guarantee, so I department. So I'm dealing with all of the pre-foreclosure work, dealing with the attorneys prior to the foreclosure notices going out. So when an asset begins to fail, I get involved in providing a trustee sales guarantee for that trustee so they can start that foreclosure process to be legal. I've watched my numbers drop significantly in the last 4.5 weeks because of the pandemic. But I see that it's going to be a buildup, that we're going to start seeing a quick run with that. But I was reading an article the other day from Goldman Sachs, and they were stating that there's going to be single-digit decline in house prices. So they feel that the foreclosure market won't, just because people put their house on the market and sell.
Yeah. And that's what, we've seen a lot of that too, distressed home sellers. That was actually one of the marquee things why Inslee kept real estate to be essential, was because, people are going to be in a situation where they need to sell in a very active, thriving market, which it is today, at least in the Northwest. It's beneficial for them to be able to put their house on the market and sell it. I mean, places like Tacoma right now, it's bonkers. It's kind of crazy. I gotta say, that's the number one thing that has surprised me the most out of this. Like, real estate is still moving quickly. Okay, so we got a few minutes before we do some Q&A. I'm not sure if we have any takers, but if you do have questions for either of these fellow gentlemen or myself, gentlemen's, whatever. Gentlemen's. Type it into the
loosely
Q&A box.
defined, I think.
Yeah, that's very loose. That's very true. Type it in the Q&A box, and then we'll see what we get. I swear I have not even had one full White Claw yet. It's not quite the slurs, but hey, weird things have happened. So yeah, just throw some questions up. If you have any questions, you can put it in the Q&A, and we'll try to get to it. And bada bing, bada boom. Gosh, I was gonna say touch on something you said, Mark. I don't remember what.
I got a question for Mark.
Yes, sir. Ask away.
Let's go.
Fidelity is, you guys have had some layoffs. I'm sure every title company has had some. What is the kind of emergence from the pandemic look like? Do you think a lot of those people will find employment elsewhere, or will they just come back to you if they're offered a position? Or
as we get through this and we start opening up our economy again, I feel, you know, there's title people and escrow people are very, very educated on that path on title and escrow. You don't just wake up, you don't go to college and say, hey, I want to be a title and escrow person. You kind of fall into it. And it's a very, very skinny scope of what we do. So I personally feel that our market's we're going to get busy again. And when we get through this, we're going to be bringing a lot of people back.
Got it. How many people did you end up having to cut, like percentage wise?
God, I would like to pass on that question.
Okay, you can't. That's fair.
We had to go through the process. When your business drops and the percentage of business dropped, right? I mean, a refinance does not take as much work as a purchase transaction because you have two buyers, you have a buyer and a seller, a listing agent and a selling agent on every purchase transaction. So you have more people involved in the transaction. When we're dealing with the refinance, you're pretty much dealing with the same lenders, the same set of docs that you can do over and over again. So we can get more productivity out of a refi team versus a purchase team. Yeah. So when the purchase business dropped, we shuffled people around. We did what we had to do to adjust for the decline in purchase transactions.
Got it. So
that's one thing to. Sorry, I was just going to add to that, Fred, and it's a good thing to point out to you have a lot of investors probably watching or that follow you. That's one of the reasons why they're going to see not a huge decline in prices, because we only have 1.1 month of inventory right now. And before you'd ever see depreciation, you'd have to see that number go way up. And we've been under 3 months for like 5 years. So it would take a lot of new inventory to see that happen.
Yeah, and it's like I always wonder, and it's really tough to tell how big of a piece of the pie did the non-QM, jumbo, and my market actually make up, right? And it's kind of a black box. It's really tough. Like I've tried to, and Mark, and I've worked with him and got mad at him. He's got mad at me, and then we make friends again. And like the data is like damn near impossible to figure out. But
yes.
Like what part of the market did we just wipe off the map, and then how does that translate, and what can kind of shift around? It's a question mark that it's all going to be there, right? We'll find out eventually, and this is why the reason why I don't answer the question, because dude, there's so much stuff either way. But I like where your head's at, man. I've been cautiously optimistic. That's the reason why Rain City is still making loans. Like I don't feel like there's a 30% downtick in the next 18 to 24 months. I don't. The fundamentals behind our economy beforehand makes me think that, and I also think that we're resilient people in general. So I think we'll get through it, but it's just going to be weird for a while. Like the thing that drives me crazy is just to even think about no football season.
Oh, what are you going to do, Fred? No
football
football
I have
season.
No idea. When it comes like August and September and I don't get to go to the Clink on Sundays or Mondays or Thursdays, oh gosh, that's going to be a problem. That's when I'm going to start spiraling out. Okay. So I got a question for you, and this answer can be personal or business, or maybe it's both. What have been your biggest wins over the last 7 weeks?
Ooh.
Biggest wins.
I can tell you, last week, like the entire week, was one of my best weeks in a while. I had put 2 deals in escrow, put 3 new listings on the market for about $3.5 million, and signed a deal with a huge vendor for a software company that I'm involved in. So that was a good week. Drank a lot of really nice bottles of wine to celebrate that one.
Congratulations, Ed.
Yeah, that's fantastic. Just on a side note, I have a cellar full of chewy, big, expensive wine that I've been buying and selling for a while. So we should compare notes after this.
Absolutely. Absolutely.
We could do a little trades or something, because I got a lot. Mark,
have
what
you
about
ever
you?
La Jolla?
La Jolla?
I get a really short story that's funny, and then Mark, I hate to cut in front of you, Mark, but this is on topic. So, you know how when you have dinner with people that you like that enjoy good wine, right? You tend to open the nicer bottles, right? We had this dinner, we drank a couple nice bottles, and then our guests left, and I was still in the mood for another glass. So I go into my cellar and I grab this bottle, and I couldn't immediately remember where I had gotten it, but I opened it. I triple decant everything. So I go through this process, pour myself a single glass, and I go out on the patio by myself, and I'm like, I should look up that bottle because I don't remember where I got it. It was a $500 bottle that I had just for myself to drink by myself.
And you can't let that one just sit around too. You're like, okay, now I'm in for the haul.
That would be irresponsible, right?
Yeah, I'm gonna have a real bad headache in the morning, but that's $500.
That's right.
That's awesome. What about you, Spurk? What's your biggest win?
I did a project back in 2015 I talked about earlier about presenting to the CFPB for the e-closing. And because of that, I've done a lot of work with a digital partner putting that whole digital process together. We have been on the phone with some very large lenders nationwide, walking them through the process of what a full digital process looks like from the title and escrow standpoint. And it's the first time in my career where I'm not on the phone dialing for dollars, working whatever I need to work to get my calendar full of appointments. It's just like, hey, Mark, are you available tomorrow at 2 to talk with so-and-so? It's like, yeah, done. Next day, another appointment shows up. Another appointment shows up. So it's been really, I would say that's probably been my biggest win, is leveraging the technology, building the platform, and then all of a sudden the phone calls just start coming in. It's pretty cool, actually. So that's been a huge win. That's on the professional side. Personal side, just being focused on doing my yoga practice, hanging out with the people that I absolutely love to spend time with. I mean, that's probably I love that on the personal side. It's been working really well.
Hey, hanging out, that's illegal. What are you doing?
Quarantine, bro.
Why do you hate old people and you're trying to kill them?
Oh, I know, right?
Oh, man, that was rude, Ed. Rude. We're telling other people to be nice, and we got the panelists being rude to the other panelists. Like, come on.
I forgot your rule. Sorry about that.
Oh, man.
I'm used to it. Every time I'm with Ed, I get beat up.
Yeah. Well,
Right.
That's what friends are for, right?
It's a term of endearment, right? I saw
Exactly.
this meme last night. It was like, you know, if you're walking and fall on your ass, your friend says, "Oh, are you okay?" You know, a good friend says, "Oh, can you get up?" And then your best friend says, "Do you walk much, bro?"
I saw that.
I'm definitely always like
The last.
I do actually probably all three of them. I'm like, did you just learn how to walk yesterday? And then I'll help you up, you know.
I think that's more than reasonable.
That's awesome. Again, always being the dickhead. Okay, so I had a couple other questions I want to ask you guys, but you know we're getting to the point where I think we have a couple of questions in here. Kevin Ackerman, he was the first one up. Any tips on how to move forward with buyers in pre-qualification and increasing their chances of securing a home during this time? Any in parentheses, I'm a licensed agent.
Yeah, that's a great question because not everything is a certainty in this climate, right? So first thing I do is make sure that I'm going to assume they're pre-qualified already, but make sure it's a full-blown pre-approval and make sure it's current. Even if I had a client who was pre-approved fully, and by fully I mean they submitted pay stubs, W-2s, tax returns, the whole nine. If that pre-approval was even just 2 weeks ago, I want to make sure that the program they're on is still available. So that's critical. And two other things. One, the pond you're fishing in. Like right now, there's 1.1 months of inventory. It's not a lot of inventory. And if your client is looking in Bellevue under $1 million, those things are, they're flying off the shelves. So have an off-market system. Find ways to find properties that are not listed. We sold in 2019, we sold over 100 homes that never hit the MLS. And that's because we have a very aggressive and active off-market system. And then the last thing is we have a curriculum we call Writing Winning Offers. So there's a number of things you can do besides price to beat out the competition. In fact, we had 36 different buyers last year that won when they were not the highest bidder in a multiple offer situation. So I think those three things, right? Make sure your pre-approval is tight and not just a pre-qual. Make sure you're doing things other than looking at active listings, and then be really aggressive in how you write your offers. One of the ones that I heard last week is a great example. It was on the market on Wednesday. I wrote on Thursday. They were going to review offers the following Tuesday. We were in escrow by Friday, and she emailed me and said, I never sell before the review date, and you played some Jedi mind trick on me, so congratulations.
Ed Laine, Jedi. the only thing that
helped.
Yeah, the only thing that I would add to that was actually like a very thorough and good answer. And I helped my buddy. I'm a licensed agent, but the last time I did a transaction was 2012, so I only have sort of access to the MLS. But I lost. We were the highest offer by like 75 grand, and we lost. I was like, what the heck? And they ended up selling it to a friend and whatever. But
it wasn't me on the other deal, was it?
I don't know if it was. I'm going to find out, and I'm going to punch you later. And you owe me a bottle of wine then.
Yeah.
But the only thing that I would add to that is that, whenever I'm the seller, or, if I'm on a flip property, or, if I'm talking to anybody, is working with like a really reputable mortgage bank. If it's like random XYZ mortgage broker, yeah, I mean, I would trade $10,000 for, having a buyer fully pre-approved with the Caliber Home Loans, or like a Guild Mortgage, or someone that is, big, consistent, and can deal with the volume and the transaction as a whole. There's a lot of stuff that's falling through the cracks, and the further you are away from the money, the more overlays they have. So if they're not the ones that are actually writing the check, they're brokering the transaction. Guess what? On broker transactions, there's more risk. More risk means more overlays. It means the less that they can do for a client. That's not always the case, but I mean, that's the only thing that I would add. And that's the things that I'm looking for as a seller of my flips, is who's actually financing it.
Good advice.
Mark, do you have
Streaming
anything?
chicken mortgage that wouldn't impress you?
Yeah, no, absolutely not. When I don't know the name, I basically just say, nope, sorry. Or, I've seen some where like they're actually big companies. They're just not, really from around here, or there's a story behind it. Yeah. So I've accepted offers like that, but it's pretty few and far between. And it's more important now than ever.
Yep, I agree.
Yeah, I'm not really involved in the front end of the transactions. We're normally involved once a transaction has been signed around. So I really don't have a lot to bring to the party on that question.
You have plenty to bring to the party. It's okay. Which, Bethany, she's got one for you. It's a little bit of a doozy, so I don't necessarily know if you have to answer this or not. He says, hey, Mark, so with the layoffs in your industry, will they remove the non-compete clause so those unemployed can get new work?
Well, that is a fabulous question. I don't have attorney Mark Spurbeck with us today, so I'm going to punt.
Yeah, I think I would punt on that question too, because you're not really the guy to answer that. Yeah, I don't even know. It's like I've had to deal with non-competes and whatnot, and it's actually kind of it's murky waters. Again, not an attorney. None of us are attorneys here. Blah 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 blah. But we had a situation where it's murky. If you let somebody go, do they still have the non-compete? And where is that? And there's not case law clear anyway. So generally speaking, that's my experience. Again, I'm not an attorney.
I thought it went all the way to the Supreme Court, and they found non-competes as unenforceable.
It's state law driven. So California doesn't matter. Oregon and Washington, they do.
Isn't there a dollar amount involved with that though?
No, it's a time period.
Oh, okay.
And again, I don't want to get into legal jargon, but yeah, no. I've actually had to enforce non-competes before, and it's not fun. I mean, it's never
No,
fun.
it's tough.
Yeah.
What are you gonna do?
This is an unusual time, though. You know, a lot of companies are doing things they wouldn't otherwise do. It might not surprise you if and Fidelity's not the only one in that boat, right? A lot of title companies had to shrink their staff.
For sure. Yeah, I don't. I mean, I think that if you get canned and it's because you don't have business, like if you're a title officer and you want to go to brand X, leaving Fidelity and going somewhere else, like I don't see them holding that up. There's usually like non-disclosure agreements, so you can't give like the secret sauce away, but you can't really. Anyway, whatever.
Hey, so Fred, how's that claw doing? You liking that?
I do. I love White Claw. White Claw is the best.
Yeah.
Yeah. Have you ever had White Claw?
I'm not a big. Isn't that like a seltzer kind of drink or something?
Yeah. It's like. Have you ever had LaCroix before?
Yeah.
Yeah, it's like LaCroix, but the alcohol version.
Oh, sweet. I might have to try that someday.
Oh, it's amazing. Well, and it's like lots of people on keto, they down this stuff like water because it's keto friendly because it only has whatever. It's like 2 grams of carbohydrates.
Oh,
You should share that video I sent you.
It was I didn't really get that because I couldn't see it was too grainy. I'm not an iPhone user, so I couldn't. I didn't have that. But so
likely story
for everybody on the call, Ed's been making fun of me for like a week. Because I was drinking White Claw last week, and he keeps sending me text messages and telling me how I'm such a weenie for drinking White Claw. I'll show you
laws.
I'll send you a picture of my
the clause, right?
I'll send you a picture of my wine cellar afterwards. You'll be like, okay, I'll give you a pass on the White Claw.
You will earn your way back into my good graces with that.
Just popping my $500 bottles of wine on accident. Oh,
right. Just another day at the office.
No big deal. That's what happens when you're a baller. Okay, so we got a couple more questions. This one's actually for Ed. If you could give one piece of advice to the investors on the call, what would it be?
Don't change your plan. Whatever you're pursuing, there's hundreds of ways to make money in real estate. They all fall into buy and hold or fix and flip, but within those, there's hundreds of ways. If you have a specialty or you're learning a specialty, don't deviate from that. I think a lot of investors, they get into sort of an uncharted market and they take risk that they wouldn't otherwise take, but they think, oh man, these are unusual times. I'm going to try this. And oftentimes it's a mistake. So do what you're familiar with, stick with your plan. If it pencils, do it. Don't be afraid not to. Just like our good friend Fred says, he's still doing deals. He's just doing good deals. So
yeah, if I was an investor right now, or the investor clients I have right now, I sit down and talk with them about sticking with the plan, obviously, but finding those properties that pencil on paper. So you've done your math and say, okay, in this geography, here's the homes that I know someday are going to be an awesome teardown or a rehab. Get 500 of them in an area and skip trace the properties, door knock them, get to know the neighborhoods, because you have this thing called life events. People die, people get divorced, things just happen in life. And if you have 500 potential properties that can be that rehab down the road or a burr down the road or scrape it and build, if you're on it consistently and the people know you, in time, you will get that transaction. It's just being in the right place at the right time with the right opportunity. So that's my thing. Stick with the plan and put your 500 homes together, put a budget around it, and work it consistently.
Yeah, and for me, if you're gonna flip it, make sure you got enough juice in there, and build in some extra time because shit happens, right? And 3 months from now, we might go through another wave, and Inslee might shut us down, everybody down for another month or whatever, just to calm everything down. So the likelihood of that happening, and I hope is slim, but it's a possibility. So, bake in an extra, 2 or 3 months of holding costs. And, for me, everything I buy, I want to be okay with holding it. So, even if it's cash flow neutral, which I have several of those, they're all in areas that I think that are going to grow up over time, and my time horizon is longer. So, always have like your escape routes, whatever that is, and just make sure when you go into those deals, that's the plan you have. So we got time, but we also have one more. It's 4:00 right now, but we also have one more question. I think this is more applicable for me, but I'll ask you guys as well. Unless Brian, did you want to come up? Oh, look, there he is. Brian, we're gonna bring him up live. We got a taker.
Fresh meat.
Yep, he's gonna come on. I think he's kind of pissed too.
Sucker.
So we'll see. Brian, what's up, man? You are live and in charge in front of a bunch of folks. So what do you got for us, man?
Yeah, well, I'm not pissed. I mean, I don't have a drink in my hand, so I guess that'd be the only reason to be upset. But
yeah, where is your drink, dude?
Yeah, that's irresponsible of you, Brian.
I know. Well, I had to move my office from my house to my parents' house, and they're non-drinkers. So, out of respect for them. Yeah. So, yeah, thanks for letting me get on. Yeah, this was quite a while back, but just had a question. So it would have been pre-Thanksgiving, but this happened. I had a property I had a wholesale deal with, and I was going to sign the contract to some fix and flippers, and they were super excited about it, and I assigned it over, but they ended up not getting approved through their hard money lender because the comps from that hard money lender, and it wasn't Rain City. Their comps came in a lot lower than what mine was, and I also had a couple of agents also kind of approve that to make sure it was legitimate. And so anyway, it was 2 days before close of escrow, and they had to back out, and I had so many backup buyers, but they couldn't fund it within 2 days because they want to do their due diligence. So my question to you guys is, what's one way I can prevent that from happening next time so I don't get smoked at the end? What's one way I can, I guess, prepare better for that?
I'm happy to take a swing at that.
I got so much shit for this one.
I used to work, and I did hard money back in the day. That's one thing that's not in my bio. The problem you have is ego, right? When someone analyzes comps, the last thing they want to hear is that they did a shitty job and that you're smarter, or your agents are smarter, and they pick better comps. And so you have the problem of overcoming someone's impression and trying to convince them that it's actually higher, when anything higher is increasing risk for them. It's an uphill battle, man. It's really hard. It's akin to we do a deal and the buyer gets a low appraisal. We got the exact same issue. We got to convince a certified Fred Rea appraiser that he's a dumbass and ignore better data, right? It's a hard uphill battle, but you can win it, but you have to bury them with data. That's the only way, is to show them, not only did the comps you pick not indicate value because of this, and this. Like, I have one I wrote a rebuttal on last week because the list is in Normandy Park, and the appraiser picked 6 comps, 4 of them were in Des Moines. Well, Des Moines and Normandy Park are night and day. That's just idiotic, right? You can't call them a dumbass. You have to do it with data and better comps and all that. Doesn't mean you'd win, man. But that's how'd I do, Fred? Is that okay?
Yeah, no, I'd say that's helpful. I mean, this is pre-Thanksgiving, so that's like a different world, right? And
Yeah.
I think that's it depends on who their lender was too, and how they look at things. Right now you're gonna find that I haven't really honestly kept tabs on a lot of lenders, but we fund a deal in a day. My staff is happy about it. We've been doing that stuff for years. So it's a little bit of different timing, but just to get ahead of it. One, if you're doing transactions in rural areas, like if you're like in the middle of nowhere and it's on 5 acres or 10 acres, that's always going to be an issue. Like unless there is a lot of really strong comps that are 5 acres that are within like a mile and a half, that's always going to be a problem, right? Because people are just like, I don't necessarily like that stuff, whatever. Unless it's just a screamer. But if you're doing a great job as a wholesaler, you have a deal under contract, you want to tack as much on top of that as you can, and squeeze it as much as you can because it's few and far between. Like you got to take that into account too. For us in general, especially right now, we try to find comps within a mile. If anybody ever comes at me with a price per square foot comparison, like I literally just like, whoosh, that's for builders. Like it's not for flippers. So price per square foot comparison is just junk because you can kind of make it say whatever the hell you want to make it to say. Comps within a mile. If it's 2-story, find other 2 stories. Split levels are okay. If it's a 1-story house and it's got 3 bedrooms, 2 baths, like guess what? There's probably going to be more of those, and you want to comp against those. And then you kind of want to bracket around. The further you go, like we see appraisals sometimes, and like we still have to order for Rain City. We still order all these BPOs because that's what our bank wants. But we literally pay zero attention to that whole thing. Like it's non-existent because we'll find comps within 3/4 of a mile or even a half a mile in transaction, and they're going out 2.5 miles. So it's like Normandy Park to Burien. Like it's not the same. And like, why the hell did you go out 2 miles when there's 6 comps within 3/4 of a mile? I just don't get it sometimes. So using that data, but with like a more refined geographic criteria and as close to the same house as you can get. And never try to adjust up. If a shitty house is sold for 400,000, you think yours is worth 6, just because you put 100 into it, you can't use some sort of a multiplier. You have to have some sort of substantiation to that. And never comp new construction against a 1970s flip that looks brand new, unless you took it down to 1 wall, because that's really the only time. I don't know. I could freaking talk about this stuff for days, and we don't have days. We're already over a few minutes. So does that help?
Yeah, no, I appreciate that. I think the comment about giving them lots and lots of data is good. Are you guys flexible if somebody presents data that makes sense to you, or are you guys pretty much like, no, we're going to use our data and back that up?
Like Ed's so beautiful and eloquently calls them dumbass appraisers. They all have their own points of view. And sometimes they're flexible, most of the times they're not. Like you might get an extra 15 or 20,000 out of them. I've actually had a rebuttal and had to go completely the other way. You're like, no, you gave me 800. I think it's worth 9. They're like, no, 750. I'm like, what the? And you're like, okay, that didn't go the right way. It's so funny because Ian Morrell, my partner, he was on last week. We have kind of a running tally of, because I'm the decision maker on all the loans. At the end of the day, I'm the guy. And, he'll be like, no, you're wrong. And here's the reasons why. I'm like, you're crazy. And I'm pretty sure I'm like $2,000 in the hole. It's been pretty good bets, and he had inside information because he was on the wholesale and whatnot. So he's not telling me everything. So, he's kind of sandbagging a little bit. But yeah, we get stuff all the time. There's things that we miss, Rain City and I can only speak for Rain City, nobody else. Our mission statement is real and lasting mutual success. And our success is yours. If you go out there and you're crushing it over and over and over again, guess where you're going to come back? To us. We want you to be successful so we can be successful too. We are legitimately tied at the hip. So, if we think in our heart of hearts that it's not a good deal, we're going to tell you that and say, hey, this probably isn't a good deal and you should pass. And it's almost self-serving, but it's also, it helps all of us.
Nice.
That's a good partner right there, Brian.
Yeah, thank you. I just wanted to say last shout out real quick to Chris Burdick with Rain City. He's been really helpful in helping me build my growth in this business. So thanks.
Awesome. Chris is a good dude. Chris spent 15 years in title. And
really?
Fidelity. Yep. And he went to the dark side.
Brian, we want to know why you cheated on Fred in the first place.
I don't know. Whatever. He might be. He might be in Oregon. Who knows? All right, man. Well, bottoms up because we're done.
Great call.
Thank you, everybody, for coming. We don't have any other questions. We don't want to waste everybody's time for this afternoon, evening. Thank you guys so much for coming. Man, it's fun. I always like hanging out with you guys, and we definitely need to talk wine after this. So, thank you, fellas.
Come in.
You guys have
Thanks for having us,
have
man.
a great night, and stay safe.
You too,
Thanks,
brother.
Yeah, you too.